Right. So today is the lecture number 13 and 14, and we are very honored to invite Professor and Dr. Yamaguchi, the former professor of the Doshi University, and he's going to provide a lecture on accounting system dynamics, which is written in the book, this one. Okay. And we're going to have the two consecutive lectures today, 90 minutes and 90 minutes until 4:15 something. And after that, of course, he has some time to share with us, so maybe we can get together to go downstairs to have some drink or, have some casual talk. And if you have any questions, and he has an email address, so you can email him directly or just ask me for forwarding your message to him for any question on the lecture today. Okay? So please welcome Dr. Yamaguchi for this lecture.
Minato for inviting me to your class. I was told that this is the only system dynamics class in Tokyo area. So I have been using system dynamics in Kyoto. So it's very good opportunity to visit his class and have a kind of exchange with his student. Today, he wanted me to talk about accounting system using system dynamics. So I developed accounting system using system dynamics. I called it accounting system dynamics. This is the first method of accounting system using system dynamics. So I found this is a very, very interesting tool in the sense that once you have some basic concept of stock and flow, you can immediately understand the very complicated concept or tools of accounting. So I have been using this method to many students, and I have a good feeling that this is the best way to understand the accounting system. So today I'm very pleased to have your feedback after you listen to my way of introducing accounting system. Okay. Right. So please stop anytime when you have some question. Okay. It's usually you sit here, or it's better to spread, because otherwise I have to keep only looking at this part. If you don't mind, I like to sit. Well, if someone can sit here in the front, it's better to sit, so I feel more comfortable. Yeah. That's good. Yeah, it sounds better. Okay, just let me start with this very simple overview statement. It is essential for business people to understand the structure of financial report consisting of income statement, balance sheet, and cash flow statement. Actually, those are three statements which are required to prepare for the corporate financial statement. With the application of stock flow concept of simple dynamics, the understanding of financial report becomes very simple and easy. This method is proposed by myself as an accounting system dynamics, a foundation of business modeling in this course. So this is overview, and recently I published a book which Professor Minato carried out. It's pretty heavy, about 500 pages. And this is a book all about macroeconomic modeling, but analysis is based on accounting system dynamics. So that book is the first book of macroeconomic analysis based on system dynamics or accounting system dynamics. And I found that's a very, very powerful analytical method to analyze macroeconomics. And this is my hope that this accounting system dynamic method could be very popular in the near future. As a matter of fact, I have quite few now feedback emails from younger economists all over the world about my new method. Okay. Chapter 3 covers accounting system dynamic method. So, and this all textbook are just available free, so you can download all my complete textbooks. And if you really want to learn simulations, you can send me an email. I'll send you all macroeconomic model free of charge. So actually, yesterday I got one mail from a researcher in Boston area, and he wanted to learn simulation of my model. So I immediately sent my my system dynamic models. So, okay. So this is the first book I'm using in this lecture. The second book is this book, which I'm passing around. This is a very, very interesting book and very clearly written in the sense that all half of the textbooks appears with this same format of financial statement consisting of income statement, cash flow statement, and balance sheet. And whenever we have transactions, the book tries to say which item have to be changed. So I thought this is the most useful books of accounting to study. So I keep recommending this book. And I realized that it's good to model whole textbooks as a just example of accounting, as a just part of my accounting system dynamics chapter. So this is topics which I'm going to cover today. But I'm not going in detail. Instead, I'm going to give you a basic idea of how we can model accounting system using system dynamics method. Okay. So the subject is, first of all, I want to just discuss the principle of accounting system dynamics. Then if we have time, I want to cover how we can just start modeling using a simple household accounting bookkeeping. Then if I have time, I want to just show how to learn the more applied modeling based on that book. Okay. So here is a brief history, which I have no time and I have no precise information anymore. But if you remember, about more than 10 years ago, we have a so-called Enron crisis. Before we have this Enron accounting crisis, we thought that American accounting system is very advanced. There should be no problem. But suddenly, they found there is something wrong with American accounting system. That's a kind of shocking news to us. So especially this is just exact from the Business Week. Normally, whenever the company owns 50% or more of another entities, then it have to consolidate. That's a rule. But there was exceptions. Exception is that the controversial exception is that outside the need invest only 3% of SP, special purpose entities, capital for it to be independent and off the balance sheet. So only if we have only own 3%, then we can make it off balance, so that then we can hide away all any losses. So that becomes the main cause of accounting crisis in the United States. Okay. In 1990, accounting firm asked the SEC to endorse the 3% rule that had become a common, though unofficial practice in the 1980s. So those are background. Then the SEC didn't like the idea, but it didn't stomp on it either, humbled by the SEC and final Financial Accounting Standards Board. Finally, for some reasons, SEC just adopted the exceptions. Then the SEC asked the FASB to set tighter rules to force consolidation to entities that were effectively controlled by companies. So that's too late anyhow. So this was happened in 2002. If you remember, this is the time when Japanese financial industry are forced to liberate the financial regulation. We call it a big bang. So many financial sectors in UK, in Japan, are forced to liberalize the financial regulation. Actually, they are forced to deregulate all financial regulations. So accordingly, suddenly we began to have accounting crisis. So that was around 2002. And that's the time when I became so much interested in why we have this kind of accounting crisis. So that became a motivation of doing analysis using system dynamics. Because before that, I have no idea, even though I have a background of economics, I have no idea of understanding accounting. Accounting is totally different from economics. You can ask the economic professor whether they are familiar with accounting. Most of them say no. So it's happened to me. So I have no information about accounting. So I started studying accounting by myself. I kept reading more than 10 books, including English and Japanese, but I have no way to understand accounting system. It's so complicated. So suddenly I have a very interesting idea. If we use a concept of stock and flow, that is system dynamics, we can clearly explain the basic logic of accounting. So that was a starting point of my research. Okay. So this is anyhow a background which motivated my research in this area. Okay. So, and I presented my method of accounting system dynamics in the conference of system dynamics in the year of 2003 in New York under the title of Principle of Accounting System Dynamics, Modeling Corporate Financial Statement. So this was the starting point of my analysis in macroeconomics. So it says principle. That means we have to present this accounting system dynamics in a very simple way of just organizing some principle, because this is academic research, so I have to present the basic principles of this method. So it turned out that this method consists of very simple 5 principles. The first 3 principles are before going to that, let me just discuss this way. Around that time, if you remember, corporate financial report consists of income statement, balance sheet, and cash flow statement. But by that time, cash flow statement is not required. But around that time, the new deregulation method just demanded the consolidation of cash flow statement into the traditional financial statement. So many people didn't know what is cash flow statement. So a lot of books just appeared in the bookstore explaining what is cash flow statement, because that's a totally new concept to many people in Japan. That's around 2000. So this is a typical one Japanese book which explains what is cash flow statement. So it's very interesting to see cash flow statement. So how many can read Japanese? Maybe. Only, okay. All right. Just you can imagine this is in a sense bucket or the or the bathtub where we can keep the cash. So cash inflows and stored in this bucket. And this cash comes from the operation. That means regular corporate operational activities create cash inflow. Then it's restored in this one. Then it goes out. Okay. The second one is the cash through investment. Actually, this is the cash which we are going to use to make investment. That means we make money, then some of the money will be put into this bucket, then we use that cash to make investment. Okay. The third bucket comes from the finance. Whenever we are running out of cash, we have to borrow money. That means we borrow money, we put that money into this bucket, then we use it. So in this way, cash flow statement consists of three different buckets or the bathtub. One could be cash flow from operations, the other one cash flow from investment, and the third one cash flow from finance. That means borrowing. All right. So this is how Japanese accountants try to explain the cash flow statement to ordinary audience. Okay. Now, I think you studied from Professor Minato about the concept of stock and flow using Starman's textbook there. So Professor Starman at MIT tried to explain the concept of stock and flow using bathtub. This is a very intuitive way so that any kids can understand the concept of stock and flow. It's so essential. It's so essential. You see, whenever we open the tap, then the water inflows into the bathtub, then it outflows. So this hot tub is described by box, which is called stock. Then stock has inflow. This is the same as bubble, right? Just imagine, we opened up bubble, then water goes in. When opened up, the water goes out. So this is how stock and flow are related to each other. So in integrations, this is inflow, outflow, infinitesimal amount of flow that we just integrate. So we obtain the stock, or at the one moment, if we differentiate, we have a differential equation. So usually we try to use integration or the differentiation, but it's the same as stock and flow. Whenever we try to learn the dynamics, computer cannot differentiate. It's very important to understand. Professor J. Forrester, founder of MIT, said, computer or nature cannot differentiate, cannot integrate. They can only add or subtract. So that's the way you have to understand the stock and flow. So just forget integration or differentiation. That's not necessary. This simple diagram enough to understand dynamics. That's how the Starman teaches basic concept and stock and flow. So incidentally, this accountant she has no knowledge about system dynamics still try to use this stock and flow to explain the cash flow. And most accountants are not familiar with stock and flow, but their brains try to use the concept and stock and flow to understand all accounting transactions. That's the thing we have to understand. So in other words, if they begin to use stock and flow, accounting becomes very, very easy. It's very, very easy subject to teach. Yesterday I was just watching some YouTube accounting educational videos. Their explanations very, very complicated. I think that's only confused students. That's why there are not so many students who like accounting. Right? Okay, but if they are just directed toward this concept, then they begin to love the accounting. So that's how I just got interested in accounting. So you see, by definition, stock and flow is just part of the accounting logic. Okay. So then first, I want to just discuss system dynamics. What is the system dynamics? So you have already studied more than 10 weeks about the concept, so it's not necessary to go in detail. But whenever you ask, what is system dynamics? This is the best way to explain system dynamics to those who have no background about system dynamics. The first principle is this. The system, what is system, by the way? System can be described by a collection of state variables. State variable, which is called stocks in system dynamics. But in mathematics, it's called state variable. And whose levels or volume are measured at the moment in time. So this is the definition of stock. Whenever we stop the time, And if we identify something, some object, then that object have to be the stock. Okay. So we usually say, whenever you take a photo, whenever you can catch with your camera, that image object have to be stock. That's the easiest way, right? So in this way, whenever you try to understand some system, you have to think about the stocks. So all collection of stocks. So that constitutes of this system. There are a lot of the stocks outside of this boundary. So that's just outside boundary. So we can only focus on the collection of stocks which we collected as just part of the system. Okay. So system is first of all the collection of stocks. That's easy. That's one first principle. Then the second principle is level of stock can only be changed by the amount of flows measured for a period of time. The amount of flow that increases the stock is called inflow, while the one that decreases is called outflow. So already you are familiar with that. So the next principle is stock, and J. Forrester called it a level. Stock, the amount of stock can only be changed by inflow and outflows. Okay. That means this stock and flows are inseparable entities. That's the next thing. So only stock can be changed by inflow and outflow. But many beginners try to change stock by connect arrows. So that's a basic misunderstanding. So only stock can be changed by flows. Okay, that's the second principle. So easy. Right? Then the next question: then what determines the flows? Okay, so that's the third principle. The amount of inflows and outflows is directly or indirectly determined either by the information obtained from the stocks through their feedback loops or parameters obtained outside the system, such that the system pursues its purpose. So for the system to be system, the system have to pursue the purpose of the system. For instance, our body is, this is a system, and the purpose of this system is just to live longer, to live healthy. That's the purpose of this system. Right? So for that purpose, all parts of my lungs, stomach, try to just cooperate each other to maintain the life. So that's the third principle. Okay. So in this way, flows can only be affected by stocks through this feedback, or by other stocks through this feedback, or other stocks through the other variables, or outside parameters. So that's the only way we can change the stocks. Okay. That's the third principle. And the way we change, the rule is just to pursue system's purpose. Okay. So it's very easy, right? So three principles. But it's very easy, but sometimes we are misled whenever we are trying to build a complicated model. We try to connect arrows to stocks. I keep telling this truth, but my students used to make a lot of mistakes. So I think you are familiar with this rule already. So this three principles comes from system dynamics. Now I'm going to cover the principle of accounting system. The principle of accounting. What is accounting system? The principle 4 is the following. Balance sheet is a collection of stock only, while income statement and cash flow statement consist of inflows and outflow of the stocks in balance sheet. So, okay. Here is excerpt from the GAAP, GAAP. How many are familiar with GAAP? GAAP is a generally accepted accounting principle. So every year they have new editions, any new edition. When I talked with CPA in the United States, every year they change rule. So CPA are very, very busy to catch up with the new rules described in this book, GAAP. Okay. So accounting system, not a rule, not a law. This is a very important thing. This is generally accepted accounting principle. Generally accepted, that means users of accountant just accept, oh, this is a good way to keep it as our rule. So there are no authorities, no laws, no violation. But the private people just agrees this principle. So this is how accounting principle is created. So just it's very important. There are no authoritative laws to enforce the rule. This is a voluntary principle. Okay? But the first page says the balance sheet report. Okay. The balance sheet report the aggregate effect of transactions at a point in time, whereas the income statement, state of retained earnings, and statement of cash flow report the effect of transactions over a period of time. You see, balance sheet is a collection of transactions at the point in time. This is what accounting book tells, point in time. Meanwhile, income statement, a statement of retained earnings and statement of cash flow are transaction over a period of time. Now you see the difference. So balance sheet is an object at the moment in time. So in system diagram, it's a stock. Meanwhile, income statement or other cash flow have to be the transaction over a period of time. So this is a flow. So now you have stock or balance sheet and flow of income statement and cash flow statement. The question, how do we relate? Okay. So that's a very interesting, interesting question. So we have to be able to relate stock and flows. Accountant, without knowing stock and flow, they clearly distinguish stock from flows. Right? So this is a very important point we have to understand. Okay. So balance sheet is a collection of accounting items at the moment in time. That means it have to be the stock. Okay, now let's move to this one a little bit. Where is okay, this one. So I'm using a very simple. This one. I'm using a very simple example from this book, and you have already downloaded my textbook. Right? Let's go this one. Okay. This is a balance sheet. How many are familiar with accounting so far? Only one?
I have not accounting experience, but I have working experience.
Good. Okay. Working. That's better. And how about other people? Have you studied accounting? No? Okay. That's good. So you are learning from totally different point of view. Okay. The accounting actually we usually start with balance sheet. So those are typical items of balance sheet. First of all, cash, account receivable, inventories, repaid expenses, and if we add all 4 items, we come up with the current asset. Then we add other asset and fixed asset at cost. So this is the value of machines or the factory at the purchase price, at the purchase time. Then we subtract accumulated depreciation. So that means if we subtract accumulated depreciation from fixed asset, we have so-called net fixed asset. So this is the same as book value. Okay. Whenever you buy new machines, the machine have to depreciate. So every year we have to subtract depreciation. So what's the remaining amount? The remaining amount would be the book value. So this applies to investment as well as financial stocks. When you buy the stocks, which costed 1 million yen, but because of sudden recessions, now stock price dropped by half. So that means you are now market value of stock have to be half of the million. Okay. So in this way, current accounting system asks us to evaluate all assets at the current market price. So in the case of machines, we have to always subtract depreciation. Then we have net fixed asset. Then when we add those current assets and fixed asset, we have a total asset. So this is part of the balance sheet. Balance sheet means it have to balance. So that means assets have to be balanced by what? By liabilities and equities. So this is one part of the balancing subject. The other part is the liability. So account payable, accrued expenses, current portion of debt, income tax payable. So those become the current liability. Current liability means this is the amount of liability we have to pay within a year. So this is a liability. So we have asset, we have liability. So difference have to be our equities. I'm sorry, this is a current liability. That means this is a liability we have to pay within a year. Then we make long-term debt. So we have to also add the long-term debt. So this becomes the liability. Then we add capital stock and retained earnings. So those are called shareholder equity. Then balance sheet have to be in balance between asset on the one side and liability and equity on the other side. This is how accounting booking are made. Okay. And as we discussed, all items in balance sheet have to be stock. Okay, stock. So instead of this complicated table, now we can use concept of stock. Now remember, all items now, cash, account receivable, inventories, prepaid expenses, other assets, all are assets, which are just stocks in terms of system dynamics, and liability also the stocks, account payable, accrued expenses, current portion debt, income taxes payable, and long-term debt. Those are the liabilities. And shareholder equity consists of, which consists of capital stock and retained earnings. Okay. So this is the first step. All balance sheet items have to be stock. Now you may ask question, how are they changed? To change this stock, we need a flow, right? So that's the system dynamics approach. Exactly, we need flows to change this balance sheet amount. So what have to be the flow? Okay. So now it comes to the next principle, principle 5, double entry rule of bookkeeping. This is kind of more complicated. Let me just read one, then we go one by one with example. All transactions in the accounting system are recorded as inflows and or outflows of stocks in the balance sheet, so that each transaction causes two corresponding stocks to change simultaneously in balance. For this purpose, each transaction is booked twice on both debit and credit side. Inflows of assets and outflows of liabilities and shareholder equities are booked on the debit side, while outflows of assets and inflows of liabilities and shareholder equity are booked on the credit side. So this is very complicated. That is why many people hate accounting. Whenever they try to explain the concept, they have to explain in English. No one understands this now, including myself. So, okay. So, but if you write down that statement in terms of stock and flow, it becomes like this. All this asset, all liability, right? This is stock. Stock have to be changed by flows. So here is the rule of the booking accounting. So we usually divide flows into debit part and credit part. Credit part. Right? That means all inflows into assets have to be recorded in the debit side. All outflows from assets have to be recorded on the credit side. Meanwhile, all inflows of liabilities have to be recorded on the credit side, so as well as the other ones on the debit side. So those are the simple rules. But this rule is still complicated. Right? Okay. So far, any questions so far? It's so easy, right? So easy. Then, now we have to split this asset and liabilities with this debit and credit side. Debit is karikata in Japanese. Credit is kashikata in Japanese. Okay. So, just split this one into two parts. This asset part, okay, this is liability, this is equity. So, debit, credit just follows to asset and liability side. Okay. So in this way, we have asset side, liability, and equity side. And whenever we have some inflows, it's recorded as a credit side. On the other hand, this side have to be recorded on the debit side. Okay. The rule is by changing flows, this part have to be in balance with this part. Okay. That's the rule. That means whenever this asset increases, this have to be balanced by reducing asset. Okay. That's one transaction. In this case, increase in debit is balanced by the increase in credit. Okay. That's one. Very easy. The second one is the transaction within this part. Whenever we pay as expenses, so that means decrease. So this have to be balanced by increase in the liabilities. So this decrease is balanced by this increase. Okay. So that's the second way to balance. The third one is whenever we increase this one, this have to be balanced by the increase in this part. Right. The fourth one is whenever we subtract, asset will decrease, and which have to be balanced by the decrease in this part. This one. Okay. So that's the physics. That's all. So easy. Okay, so easy. Okay. So now you understand taishaku taisho in Japanese. Taishaku taisho, it's hard to understand, but whenever we say in English, that's balance sheet. Balance means always increase or decrease of this part have to be balanced by increase or decrease by this part, or within this part, or within this part. So that's the principle. So we have only 4 different combinations. So once you understand this principle, you can make any bookkeeping works without any confusion. But almost all accountant or student of accounting, without understanding this basic logic, just try to memorize. I talked with a lot of accountants. How do you classify the bookkeeping into debit side, credit side? You smile. Yeah, just remember. Okay, just remember. That's not the way. But once you understand the basic principle, the accounting will become very, very easy, but very beautiful system. Okay. All right. So here is I go one by one. Here is the example. Debit inflow, credit outflow. So transactions within assets are classified in this category. For example, an increase in fixed asset by the purchase of PP&E. PP&P is property, plant, and equipment. This is a basic concept of the investment. Property, plant, and equipment is balanced by the decrease in cash by its payment. So whenever we make investment, we buy machines. So we have to pay these machines by paying cash. That cash is a decrease. Then we increase asset of machine. Okay. So all transactions are within the asset. That means cash asset is decreased, but the same amount of machine value is increased. Okay. So these are transactions. So this comes to the debit side, this comes to credit side. Okay? But in system dynamics, it can be easily done. Just account receivable decrease, then cash increase. So this is a better way to understand. Actually, whenever cash is paid out of account receivable, asset of account receivable is decreased. At the same time, asset of cash will increase. So this is just the shift of one asset value into another. Okay. So that's the first principle. So easy. Okay. Then, whenever we make the purchase of the machines have to be depreciated. So this is the original price. So say this is originally this is 100, and this begin to depreciate by 30. So the total value of machine of 100 stay the same, but book value is now 70, and depreciation is 30. So this is how we keep the book value. Yeah.
In this model, like it should have been feedback to the book value, right? Like whenever we go to the second year, if we say the asset is depreciated by 25%, then the value of the asset is 75% only, right?
Yeah.
But it's like depreciated values would feedback to the original book value.
In accounting, there are no feedback from the depreciation. So this depreciation have to be balanced by the other side of the liability or the equity. I'll come up with this. So usually whenever we pay cash to buy machine. So cash asset is decreased and asset value of machine is increased. So this is investment transactions, which can be modeled by stock and flow. Right. Now the second transaction, all about the liability side. Transactions within liability and equity are classified here. For example, a decrease in retained earnings caused by an increase in operating expenses, such as sales and marketing expenses, is balanced by the increase in accrued expenses. Okay. This is a transaction within the liability and equity side. So whenever we try to pay operating expenses, like wages or some expenses or trip, those operating expenses or salesman just costs, say making a business to companies. But we never pay cash directly. Whenever we pay, so retained earning will be reduced. When a salesman makes a trip, then that's a reduction of retained earning. But we keep that expenses as a part of liability, accrued expenses. So that means assets stay the same, but we have to pay this accrued expense later. This becomes liabilities. So retained earnings decrease, but the same amount of liabilities increase as accrued expenses. Eventually, this accrued expense have to be paid out in cash. Okay. But for a while, we keep this one within this liability and equity side. Okay. That's the second transaction. And the third one, transaction in this category causes both asset and liability equities to increase. For instance, an increase in net sales causes both account receivable and retained earnings to increase. This is a very popular modeling method. Whenever we make sales, we receive revenues. Whenever we sell our product, we receive revenues. It have to enter into retained earnings. At the same time, the same amount have to be added to account receivable. Okay. It's not paid yet, but it have to be paid in the near future. We call it account receivable. So in Japanese, it's called urikakeki. Kake deu. We just make sales with the expectation that in the near future we do get sales payment. Okay. So this is both asset and liability side, equity side increase. So the fourth one is this one. The transaction here cause both asset and liability equity to decrease. For instance, payment of account payable cause both cash and account payable to decrease. Okay. Now, accrued account payable, whenever we buy raw materials, we not pay immediately, right? whenever we buy some raw material, we can only pay towards the end of the month. So, but when we have to pay, we have to pay out of its account payable. Account payable in Japanese means kai kakekin, kake de ka. So we buy raw materials, but we never pay immediately. Maybe we pay a month later. So, but when we make a payment, we have to pay out of our cash. So asset of cash and account payable have to decrease both. So this is the first transaction. So in this way, any transactions have to be recorded twice, whether within the asset side or within the liability side or the asset and liability side. In either way, the one transaction calls two booking. That is why we call it a double booking, double entry, or double booking. Fukushiki-boki in Japanese, fukushiki-boki. Okay. So that's enough. Very simple principle. This is a little more very useful application. Whenever we make sales, retained earning will be increased by this amount, revenue increase. Whenever we have a sales, so this amount have to increase account receivable. At the same time, whenever we make sales, usually we have to subtract the cost of goods sold. Cost of goods sold, right? Then when we subtract cost of goods from revenues, this decrease have to be balanced by the decrease in inventory. So this is shipment. So whenever you create a business model and you say that you have now sales, then you put this sales as an inflow into revenue, retained earnings, and you make it as an account receivable. At the same time, your model have to calculate what's the cost of goods sold. This is not the cost of goods sold. Only we have to calculate the cost of the product which we sold. That's what we call cost of goods sold. Then this have to come from our inventory. So we have to subtract inventory. So this is a better, this is a way we create business model. So this is very basic part of the creating any business model. Okay. So now we covered 3 basic principles from system dynamics and 2 principles from accounting system dynamics. Now we combine those principles 1 through 5. And I call it accounting system dynamics, a principal accounting system dynamics. So it's a little more academic definition. But principle 1 through 5 consist of accounting system dynamics. Accounting system, by the way, accounting system is the most robust or the powerful method we have in social science. If you are interested in the history of accounting, it have to go back to the Venice merchant story or before that. Whenever we have a history of human activities, accounting or bookkeeping have to be a part of that history. So then they developed a very, very powerful double booking accounting system. So accounting is the most powerful method or principle in social sciences. Meanwhile, system dynamics is the basis of differential equation, which is created by Newton. So this is the basis of natural science, the basis of social science. So that is why accounting system dynamics is the most powerful method of analysis in science. That's what I want to emphasize. That is why my macroeconomics book is based on accounting system dynamics. That's a combination of accounting system and combination of differential equations. So this method can be applied to any business model. So I like it to encourage to use from now on this method in your business model. So I have no, it's free to use. I have no copyright, so you can use it. You can use this one. Actually, researchers are using this accounting system dynamics as a basis of a new powerful model. Okay, so So far, any questions so far? It's very simple. Now I'm going to apply this one to create a very simple business modeling technique applying this accounting system dynamics. Professor Minato said that you are supposed to present your own models next week. Tomorrow. Okay. Tomorrow maybe too short, but if you have a week, maybe you can apply as a part of this accounting system dynamic method. Okay. This diagrams comes from chapter 3, but chapter 3 I forgot one item, so this is more revised part. And I think Professor sent you the models. You can open up your Benson model reader and open the model I sent. Have you downloaded the Benson model reader? Okay. Are they? Okay. If you have laptop, you can. If you have laptop, you can open up your laptop and this model will run on Macintosh and PC.
I uploaded the model sample from Dr. Yamaguchi. So if you download the special software based model readers from the website, you can see it.
And if you don't have, you can send email later. I send you the old model from the book. Okay. So it's better to just open up your laptop and start looking at the model. Because this is the prototype of all business model you create. Whenever you create any applications models, it has to be formatted at one page as just financial statement. Because if you don't format your models in terms of the financial statement, the managers never understand. But if you bring your business models in a format so that your manager can understand, then they pay more attention to your model. So I usually ask my students to create business model, any model, but eventually they have to summarize the business model in terms of this balance sheet. So I always ask the student to create extra pages which consist of this framework. Then they bring all the business models. And once you create this one, you can easily do any financial analysis. It's a very powerful method of analyzing any business model. Okay. Now you open up with the Benson model reader. So this is the first page you made it look at. You see here is the asset side and liability and share for the equities. So you can just open up different pages by using your up and down arrow keys. But just start with the first page. So this is the start point of any business model. Just you can imagine you have your own new venture business, or you start up with new the project. So first thing you have to do is whether you have enough capital to run your project. Okay. So if you don't have capital, you have to ask the investors to make investment. So you issue new stocks and ask your friend to buy your company's stock. That is a new issue of shares. And successfully, if you sell your stocks, now you see this increase in equities, then your cash of asset will be increase by the same amount. Okay. That's how you obtain the initial cash, seed cash, to start any project. Any project have to start with this cash availability analysis. If you don't have enough money, then you make a loan from banks. So whenever you borrow money, it have to increase a debt liability. At the same time, this amount of loan increase your cash. Okay. So in this way, loan and share new issues will increase your cash asset. By the way, you are familiar with this shadow variable, right? Already. Okay. This is a variable which is used already on this side. Okay. All right. So in this way, now you secure your fund. This is a fundraising part of your project. Once you have a cash, now you pay cash to buy the asset, buy the property. Okay. So that's investment is just transformation of cash asset into the machine asset. Okay. So any project have to have this kind of basic model. All right. The next thing, once you have machines, now you have to start producing your product. Okay. The next one, all you have to do now, you start employing workers and buying raw materials, and you have to start your own product. So whenever you employ workers, you have to pay wages, right? Wages. So you have to pay wages out of your cash. Okay. That means now cash have an outflow of expenses, and part of expenses consists of wages. All right. At the same time, now asset of cash decrease, but at the same time, whenever you pay wages, you are not losing money at all. You are just increasing inventory values. So wages enter into your inventory values. Okay, that's the way you model. At the same time, you buy raw material part of the inventory. So that means asset will increase by this amount. How do you balance this increasing asset? So whenever you buy raw materials, we add liabilities of account payable. So we are going to pay for later, but just wait for a while. We have no cash yet, so we just pay. So we put into account payable. So in this way, whenever we buy raw material, inventory increase is balanced by the increase in account payable. Okay. So in this way, this increase. All right. Then eventually, machine begin to depreciate. So there are two ways to model the depreciation. One part is if you are going to use your machines to produce product, depreciation is part of the inventories. You have to increase inventory by the amount of decrease. That means machine value is increased, but at the same time, inventory value increase. So you bring this one to this one. So we have nothing to lose. Okay. So this is one way to handle the depreciation. All right. Okay. That's okay. Then what next one? Next one is now our product is ready for sale. Now we have to pay the sales people, sales and marketing, or we have to make an advertisement. All kind of costs which are related with operations are just summarized under the operating expenses. In accounting, you have to distinguish costs from expenses. Okay. Costs from expenses. Costs and expenses are totally different concepts. Okay. So those have to be only expenses. All right. And those expenses have to be paid out of this cash, right? Cash. So operating expenses have to go this one. So retained earnings decrease by the amount of cash decrease. Okay. Okay, so far. now because of this effort, now finally our product are sold. Now we made sales. If we multiply price, now we have a sales revenue which goes into retained earnings. At the same time, this amount have to increase account receivable. So in this way, increase in sales is balanced by the increase in account receivable. Okay, account receivable. Okay. And at the same time, as I said previously, we have calculated the real cost of this sales. So we have calculated cost of goods sold. So we have to figure out what's the unit cost of this order. Then we have calculated cost of goods sold. Then this amount have to be subtracted from our inventory. We ship this product out of our inventory. So we have to subtract the same amount from inventories. Okay. Yes.
What is the relationship between the cost of goods sold and shipment? Shipment is the number of products we are shipping to the customer.
That's right.
And does that number of products depend upon the cost of goods sold? Like, shouldn't we
Yes.
it the other way? Like,
Not the other way. But first of all, well, it could be the other way.
yeah,
But
if we
in this
say
case, the order have to be anyhow,
Yeah.
have to
shipment,
go out of this cash. So you can count this one, but at the same time, this amount have to be the same as cost of goods sold. So the better way is first you figure out how many units you have sold, then you multiply unit cost. This is unit cost of goods sold. So this is that value have to be subtracted from inventories. But this is the value part of the record. But real physical unit have to be modeled in different way.
Yeah. Like, I was thinking that if we sell 50 units, then like if one unit costs 5 yen, then we'll be having 250.
That's
yen.
right.
Like,
That's right.
that's why I thought the errors would be the other way around. Shipment
Other
to the
okay,
cost of goods.
yeah. Other way, that's correct also. There's no way to, yeah. But the essential thing is whenever you subtract this one, the same amount have to be subtracted from this part. So after that, now we have a concept of gross margin. Gross margin is sales revenue less cost of goods. Say the sales value 100, but cost of goods is 60. That means gross margin 40. So gross margin is the first concept of revenues. Okay. So we create a shadow variable and we calculate gross margin. By the way, if you want to know the definition, you just click variable and it's a document. Then you have definitions. Okay. And this Bensu software very, very powerful. And if you want to know what's the cost of goods sold, then you click this one, then press this one. So you do get this definition. What's the unit cost? Then you click this one, you do get unit. So in this way, without going back to models, you can just click the variable and you can see the definitions. Okay. So it's very a powerful way to document these models. Okay. All right. Now, what's the next one? Now, next one, finally, account receivable will be paid. We pay receipt. See, this is a very important part. You know, accounting, whenever your product are out of your factory, you can book as like a sales. But you are not sure whether your product paid. Only when your product paid, your cash flow increase. That is why revenue is different from cash flow. Many people don't understand, whenever we sell a product, we should have a cash. but it's not true. For instance, whenever we sell a product, but the company, if that company went bankrupt, so we never get our sale. So that means even though in accounting term we have revenue, but the cash is not paid. So it's totally different concept. Okay. Now we have a receipt. So in this model, we are trying to calculate a cash flow. Cash flow statement is, in terms of system dynamics, just inflow minus outflow. So it's very easy. This transaction becomes cash flow statement. Okay. For instance, cash flow, if you define cash flow, you define this one. Cash flow is okay. This is not a model. This is just a function. So it's not a precise model, but you see what variable constitute cash flow. Right. Okay. And finally, now see here. Now liability have to be paid out. This is a principal payment of debt, and this is accrued payable amount of payment. So those decrease in liability have to be balanced by the payment of cash. So all have to go to the expenses out of cash. Okay. All right. And okay, what else? Finally, okay. In this way, now we subtract all operating expenses, then we have a concept of income from operations. This is a gross margin, then we have subtract operating expenses. Then we have concept of income from operations. Then we pay non-operating expenses. And this becomes the best concept in accounting. That's called earnings before income tax. This is the most important concept. EBIT, earnings benefit from income tax. Then you are going to pay income tax out of this earnings before income tax. Then the difference becomes your net income. And out of this net income, now you are going to pay the dividend to shareholders. Pay dividend, okay, dividend. So this is a very simple but powerful basic framework of accounting. And you see from this one, these inflows and outflows, this constitute income statement. But income statement, if you remember, income statement is just the flow, right? But in system that flow needs stocks. So stocks of income statement is retained earnings. This is the point which most people don't understand. This is the inflows of income, outflows of income. Whenever we inflow and outflow, we have to have stock to pull those flows. That have to be the retained earnings. In a balance sheet, retained earnings becomes very, okay, so, yeah.
Model for a whole fiscal year, then retained earning would be 0 at the beginning of the fiscal year.
That's right, yeah. Okay, see, here is the income statement. The income statement just flows. This is the inflows, this is the outflows, all outflows, the net income. These are all flow tables. But whenever we have flows, we need a stock in system dynamics. So that's the, I think, point of your departure from the ordinary accounting people. So always retained earning have to be the stock in which inflows, outflows of income statement just enter. Okay. So you can use this best framework for any business model. Whenever you create your business model on a separate page, and finally you bring your model into this format. Yes.
In this flow, the only operation cash flow is shown.
Yeah,
How about the cash flows for the
From
investment or the
well, this
the
is
finance?
actually yeah, this one. This is a simple diagram. It's not sure, but this cash flow is cash flow from operations. And whenever you use this one, this is a cash flow from investment. And whenever you borrow this one, this is a cash flow from financial activities, from finance. So operational cash flow, investment cash flow, financial cash flow. Yeah, that's if you are precise, yeah, it's very, yes.
A lot of students now work on the more like social-oriented business, like government and medical expense. So if they can apply the debt and expense of the medical social issue for the government, how can I apply this model for such issue?
Social business, actually the basic principle is the same. Whenever the social business, then you receive, say, some revenue out of your social services, you apply this one into the same way. So the only thing is you never call it a profit. If that's a non-profit, you just call it income, not profit. But the accounting principle is exactly the same, apply to any. Is someone working on social business model? It's really good, yeah, to summarize your social business. And finally, once you have a very detailed transactions, now it's better to look at this as just an overview of all accounting transactions. You see, from this one, it's better to understand all monies come from right-hand side. Money have to enter from right-hand side into this one. Part of money enter from the banks or from other companies or from sales. Right. So money comes from outside, then it have to go through all cash. That's a very important thing. That's all transactions have to go through this cash stock. You may say, oh, it has nothing to do with cash flow. But eventually, whenever you buy this one, it goes to account payable, right? Whenever account payable paid, it has to go through cash. That means money comes from right-hand side and goes through cash, then change into other asset, then it creates money again. So in this way, this is the flow of all transactions. So that is why cash is the most important statement, cash flow. There's no way to avoid cash flow. That is why whenever a lot of banks are now facing bankruptcies or insolvencies out of the so-called poisoned or subprime loans, they have a lot of assets, but their asset liability have to be paid out of cash. Whenever they have no cash, they have to go bankrupt. Okay. So that is why the cash flow is very important. In my application model, all the transactions have to go through cash stocks. Okay. So you can imagine whenever you make any project, you raise fund, right? That means you have to make money, you have to borrow money, or you have to sell your stocks. Then the money you collected is spent on investment or inventory. Then you make a sale, then the sale now makes an inflow of money, then that comes into cash, then this cash will pay off initial one. This is all basic principle. Any project have to be evaluated by this simple diagrams. Once you understand this one, your modeling is so, in a sense, interesting. And no confusion or no complication just disappears. Just remember this, this is very simple format, and I'm trying to encourage any modeling student to use this format as part of their the models. Okay. Well, sometimes you can start with this framework, then you add some production and other part on different models. That's a quickest way. Okay. So that's all right. So far, any question up to this point? Just focus on it. So in a sense, so simple, so powerful enough. And okay, now let's move to this one. 1, 2. Okay. Now we have covered this part. Okay, this is the end of the simple accounting system dynamics part. Okay. And next one is the best simple application of this accounting system into housekeeping modeling exercise. But I'm not sure whether you are interested in this part or. Have you created your simple models in the classroom? I usually ask a student to create the simplest bookkeeping model household. Then you can use that one into the more realistic business models. But I'm not sure whether you're interested in. But anyhow, this is a simple basic part of the accounting so far. How many are using Benz PLE? You have installed Benz PLE? Okay. And have you created model so far? Just explain what model you have so far. I'm sure Professor Minato is very, very strict. Start with you have created a lot of models. Can you just explain what model you created so far in the classroom? Just give me some basic idea. Any? Just explain any model here.
Our team created the model regarded with a number of eco cars and the car purchase flow. Yeah, how user buy the cars and how they choose whether old traditional car or new type of eco car and how market grow for something.
And you learn simulation so far? Did you learn simulation?
Yes.
Okay. And next student, what do you, Prof?
We were looking at Docomo's subscribers and the competition. So that basically the cell phone market. Yeah, I'm not sure if our team might have changed some things, but
Docomo's
subscription.
Docomo's
subscription. The number of subscribers.
Subscription, okay.
And then the competition
In
subscription.
comparison with other reform. I think did you come up with some interesting simulation?
Well, I think we kind of matched the market
Mm.
and like the historical values.
That's kind of shaped marketing logistics.
Well, we started from I think 1990 something, so the market was already leveled off, and if it's gonna go down.
Oh, you pass. This one's the same thing.
Now we are in the same team. We try to simulate how sick employees influence the profit of the company. Like if they are on leave, the productivity of company decreases, and it will affect. It will ultimately affect the operating profit of that company, and how that company allocates budget for vaccination or for preventive medicines, so that the workers do not get sick and the production continues. The feedback is like the company motivates employees to go for vaccination by allocating budget, like by giving them allowances for vaccination.
That's pretty format into this.
Yeah, like I try to use the right hand side of the income statement. Like
Okay.
from sales it goes to operating profit. Then from operating profit we allocate some budget for preventive healthcare. Then again employees are motivated for vaccination, and we just use the right side of the income statement.
Okay.
Yeah.
Good. So try to bring your model and numbers so that they can evaluate.
Yes.
Yeah, you're working as a team. That's good. Oh, it's the same team. Yeah.
We have 3 teams on the next team.
Oh, they are out of the
Yeah.
already gone back.
Yeah.
So,
There's another team. They are working on the simulation of the university KOPN. How we spend money for the international program, and how many English-speaking professors we should hire to internationalize this initiative.
okay.
So there are 4 teams.
Okay. Okay. So, really, I like to encourage to apply this format into your project and come up with more cash flow and other income statement analysis with this one. Okay. Let's. So if we have time, I'd like to just cover the simple idea. This is an introductory model, but which is very, very powerful to understand. This is just not double entry, just single entry housekeeping book, and which converted into double booking entry. So by creating this kind of simple model, we can easily understand the basic principle of how double booking entry is important for the financial analysis. Okay, so just quickly, by the way, me?
一応2時半で。
Okay, that's good to stop here, and I'll just summarize this one after the break, and then I'll go into the more application part of the book, which I have no intention to go over this. I like to work on that, but I'll show you how to learn simulation, how to just understand all transactions. That example covers almost all type of transactions which are necessary to create as a system dynamic model. Okay, this is it. Great.
ということで、意識に